The bank account is a coffin for value. You deposit labor, you withdraw dust. The numbers do not change. The world around them gets expensive. This is not an accident. It is a feature of the currency. The system is designed to punish those who hold cash. Safety is the trap. Workers believe the bank protects their wealth. The bank actually lends it out. They pay you 0%. They charge the borrower 6%. You lose. Inflation is not weather. It is a policy. The central bank sets a target. 2% destruction per year. That is the official goal. It compounds. Over 10 years, that 2% eats 20% of your purchasing power. The money stays in the vault. The value leaves the building. It vanishes. They call it price stability. This is a lie. It is controlled decline. They steal the value of your labor slowly so you do not panic. Think of your savings as ice. The bank is a warm room. The ice melts. You are left with a puddle. The volume is the same. The utility is gone. You cannot refreeze the water. You cannot reclaim the years you worked to earn it. The theft is permanent. It is legal. This forces you to gamble. You cannot just save. You must invest. You must buy stocks. You must buy real estate. You must take risks. The system pushes you out of safety. It pushes you into the casino. If you stay on the sidelines, you bleed out. If you play, you lose. The wealthiest people hold no cash. They hold assets, buildings, gold, shares, things that the central bank cannot print. They know the currency is fake. The poor hold cash. The middle class holds cash. They trust the number on the screen. They trust the paper in the wallet. This is the mistake. The mechanism is simple. Supply and demand. If you print $1 trillion, the dollars become common. Common things are cheap. Your savings become cheap. In 1971, the link to gold was cut. The restraint was removed. The printers could run forever. The debt could grow without limit. Since then, the dollar lost 90% of its power. A house cost $20,000. Now it costs $500,000. The house did not change. The currency collapsed against the asset. You are not paying for a better house. You are paying with a weaker dollar. This forces you to work harder just to stay in the same place. This is the hamster wheel. It is made of invisible inflation. The saver is the loser. The debtor is the winner. If you owe $1 million, inflation erodes the debt. The system rewards those who borrow. This flips morality upside down. Prudence is punished. Recklessness is subsidized. The entire financial structure is built on this inversion. It is a logic glitch. But the glitch is necessary. Without it, the government goes bankrupt. They need your savings to die so their debt can live. It is a sacrifice. The illusion began with cheap credit. Suddenly, you could buy things you could not afford. The bank gave you numbers. You gave them your future labor. Prices rose. People felt rich. They looked at their house value and saw profit. It was not profit. It was inflation masquerading as wealth, a mirage. Corporations stopped innovating. They started engineering. They borrowed cheap money to buy their own stock. This pushed the price up. The mechanism created value from nothing. This is the Cantillon Effect. The fresh money flows to the center first. Banks get it. Governments get it. By the time it reaches you, prices are up. The insiders buy assets before the inflation hits. The outsiders pay higher prices with stagnant wages. The gap widens. It is not luck, it is physics. Debt became the new income. Student loans replaced salaries. Credit cards replaced savings. The entire economy shifted from production to consumption. We stopped making, we just bought. The central banks kept rates at zero. This destroyed the signal of risk. When money costs nothing, bad ideas get funded. Zombie companies rose from the dead. These companies do not make profit. They survive by borrowing more to pay old debt. They are on life support. The central bank provides the oxygen. The pension funds had a problem. They needed safe returns. Government bonds paid nothing. So they moved into risk. They gambled your retirement on the stock market. The risk was hidden in complexity. Derivatives, swaps, bundles. Bankers took simple mortgages, chopped them up, and sold them as gold. They sold the risk to you. This created the everything bubble. Stocks, bonds, art, real estate. All prices went up together. There was nowhere to hide. The correlation became one. The system requires exponential growth to service the debt. If the economy slows down, the debt weight crushes the host. It must keep moving, or it dies. So they print more. Quantitative easing. It sounds technical. It is just counterfeiting. They buy their own debt to keep the game going, a snake eating its tail. This signaled the end of free markets. The central bank became the market. They decide the price of money. They decide who wins. They decide who fails. The illusion worked for a while. You felt safe. You had a job. The stock portfolio looked good. But beneath the surface, the foundation was rotting away. You cannot print productivity. You cannot print oil. You cannot print food. When the real world demands payment, the paper money burns. The check bounces. The trap is now set. If they stop printing, the system collapses. If they keep printing, the currency collapses. They are cornered. There is no exit. We are living in the lag time, the time between the cause and the effect. The fuse is burning, but the explosion has not hit your ears. Smart money is exiting. They are buying land. They are buying Bitcoin, gold. They are leaving the theater while you are still watching the movie. They know the ending. The illusion is breaking. Cracks are appearing in the bond market. The banks are wobbling. The math does not work anymore. The correction is due. The crash does not start with a bang. It starts with a whisper. A bank fails in silence. The interbank lending market freezes. Trust hits zero. Liquidity vanishes. Everyone wants cash at the same time. The exits are too small. The system is leveraged 30-1. There is no money. The sell-off begins. Algorithms trigger automatic sell orders. The red candles on the chart drop vertically. Billions of dollars in paper wealth evaporate in seconds. This is the margin call. Lenders demand collateral. Investors must sell good assets to pay for bad debts. Gold is sold. Stocks are sold. Everything falls. The contagion spreads from the financial sector to the real economy. Credit lines are cut. Businesses cannot buy inventory. Payrolls cannot be met. The engine seizes. Jobs are deleted. This is not personal. It is a spreadsheet adjustment. Cost reduction is the only survival strategy. You are a cost. You are cut. The government faces a choice. Let the system reset and accept a depression, or print money to fill the hole. They always choose the printer. They call it a stimulus package. It is a currency dilution event. They drop trillions into the economy. The stock market recovers. The currency dies. This is the crack-up boom. Prices soar while the economy shrinks. You have more money in your pocket, but you can buy less food. The saver is destroyed again. The inflation rate exceeds the interest rate by double digits. Your emergency fund is burning. You are paying for the bailout. People realize the paper is worthless. The velocity of money spikes. They spend it as soon as they get it. They buy anything tangible, panic buying. Shortages begin. Supply chains break because prices change too fast. Producers hold back goods. They wait for the price to rise. The shelves go empty. The social contract fractures. Those with assets get richer in nominal terms. Those with wages get poorer in real terms. The inequality becomes visible tension. Then comes the repression. The government blames speculators. They blame hoarders. They blame you. They implement price controls. This creates black markets instantly. Capital controls follow. You try to move your money abroad. The transaction is declined. The firewall is up. Your money is trapped in the burning building. They introduce bail-ins. The bank takes a percentage of deposits to save itself. This happened in Cyprus. It is legal in the West. Your deposit is their liability. This is the final betrayal. You played by the rules, you saved, you trusted. The system changed the rules at the end of the game. The crash is not a bug. It is a feature. It transfers wealth from the fearful to the ruthless. It clears the board for the next cycle. You are left with two options: accept the loss and start over, or understand the mechanism and position yourself for the reset. Most people just freeze. This is not theory. This happened to real people. It happened in Lebanon. It happened in Venezuela. Let me tell you about the silence of the ATMs. Look at Beirut in 2019. It looked modern. It looked safe. The banks were made of marble and glass. People trusted them with their life savings. The banks offered high interest rates on dollar deposits, 10%, 14%. It was a magnet. The diaspora sent billions back home. They thought it was profit. It was a Ponzi scheme sanctioned by the state. The banks took the dollars and lent them to the government. The government wasted them on corruption and imports. October 17th. The music stopped. The banks closed their doors. When they reopened, the rules had changed. You could not withdraw your dollars. The money was trapped inside. They invented a new term, lollars. It was a digital number on a screen. It was worth 15 cents on the real dollar, a ghost currency. People stood in lines for hours. They begged for their own money. The bank managers sat behind bulletproof glass. They said no. The system had locked the doors. The middle class vanished in months. Doctors became taxi drivers. Engineers sold vegetables. The life savings of a generation were erased by a simple change in policy. One woman needed money for her sister's cancer treatment. The bank refused. She had the money in her account. The bank said it was not hers anymore. This is the reality of counterparty risk. When you deposit money, you become a creditor. If the bank fails, you are just someone owed money. You wait forever. Armed depositors started storming banks, not to rob them, to withdraw their own savings. They held hostages just to get their own cash. The social contract died. The currency lost 98% of its value. A salary worth $4,000 became worth $80. The prices of food remained in real dollars. You starve. The electricity stopped. The government could not pay for fuel. Beirut went dark. The ATMs were black screens. The modern financial system had simply turned off. This was not a war. There were no bombs. It was purely financial. It was a spreadsheet war. The weapon was inflation. The casualty was your future. Those who held physical gold survived. Those who held real estate survived. Those who held cash in the bank lost everything. The lesson was absolute and brutal. The central bank governor blamed the people. He blamed the situation. He never admitted the mechanism was designed to fail. He kept his own wealth safe offshore. This is the end game of the debt cycle. Lebanon is not an anomaly, it is a preview. The math is the same in every fiat system on Earth.